Okay, welcome to the Decision of Power Trader Development series. This series is part of the premium group, right? So what we do ask is that you don't share any of this information online. The links are going to be available on YouTube, but it's going to be hidden from public, right? So you're going to be able to only find these links in the Decision of Power premium group. Okay, so I'm not sure how long this presentation is going to take, but you need to get a pen and paper if you haven't already got one. Because you're going to need to take some notes in this during this presentation. Okay, so in these slides then we're going to quickly go through the Decision of Power trading system, so the 4-step system that we have as our trading plan. We're then going to go through the Decision of Power terminology. So this is the terminology you guys are going to be using in the group moving forward. So if you're bringing any other terminology from Wyckoff or any other mentors, we're going to be looking to completely eradicate all that and just stick to our terminology. So it makes things a little bit easier for other people to understand where we're heading with our markups, right? The next one then is using correct markups. So I'm going to be talking about the importance of that and why we're going to be trying to make everyone stick to the same way of marking up the charts. Next one, we've got the SSR setup short, so the single structure retest setup. We'll be going through that. Then we're going to be going through the DSR, so the double structure retest. Next, we're going to be going through the single structure retest setup long, and then we're going to go through the DSR, so the double structure retest setup long. Okay, so 2 short ones and then 2 long ones, right? Just to give you a good example of that, it's going to be drawings rather than actual chart work, right? The next one then we're going to be going through the SSR and the DSR targets, and then we're going to focus on the importance of focusing on the setup before the target itself, right? So I'll talk about that shortly. Then we're going to go through the importance of risk management, and then I'm going to quickly touch on eliminating fear in your trading. All right, so let's move on. So first of all, then we've got the Decision of Power trading system, right? So like I said, it's a 4-step system that I've developed over time in order to get the entry in the market, right? And the first step of that is, are there equal highs or lows present? So if you go on your chart, doesn't matter what time frame you are on, what pair you're on, if you like your crypto, your stocks, your forex, your metals, it does not matter what you're trading. You need to mark your equal highs and equal lows. Okay, once you mark them, if you do have the capability within your trading platform, you want to set a trading price alert on there, right? So if price runs those equal highs or lows, you're then alerted of what's going on in price, and then you can look at that chart and see what's going on, right? So step 1, are there equal highs or lows? Step 2, have the stops been ran? All right, so above equal highs or below equal lows, double bottoms, triple bottoms, same with like double tops, triple tops, quadruple tops and stuff like that. You're going to have retail stop losses and also stop orders, so buy stops and sell stops. Okay, so what we're looking for, have the stops been ran beyond them equal highs or equal lows? That is step 2. And then step 3, we have, has price rejected the level? So once we've ran above the highs or below the equal lows, and the stops have been ran, we're then looking for price rejection. Okay, and if it has rejected, we're then waiting for the 4th step, which is, has there been a break in market structure? Okay, so has market structure broken? Once you've got all 4 of these points confirmed on your chart, you've now met the criteria for a potential setup. Okay, and we'll go through how we get the entries and where we're going to be putting targets and things like that shortly. All right. So the next part then, the Decision of Power terminology. Now, this is going to be an important one moving forward, because we want to make sure everyone's on the same page. We don't want people coming in using other terms from, like Beat the Market Maker, ICT, other retail trading concepts. We have, you get other mentors that have their own terminology. We want to use our own terminology in this group, and we're going to have people, admin that are going to be sort of enforcing that, right? So if you do mark your charts up and use random terminology, you'll be then asked to take that chart down in the group and then go and put the correct terminology on there and the correct markups and then repost it, right? But until that point, nobody will be commenting on your analysis. So let's go through the terminology then. So first of all, we have equal highs. Okay, so this is a widely used term in the trading industry. Okay, so we don't want to be calling them double tops because sometimes you might get 4, 5, 6, 7 taps along a resistance level. And then, at that point, we're going to call them equal highs, right? So if it's a double top, a triple top, quadruple top, it doesn't matter. Across the board, it is equal highs. Okay, so EH you're going to be marking on your chart. Second, we've got equal lows. So like I've just opened the highs, we're not going to be calling them double bottoms. You do get double bottoms, triple bottoms, quadruple bottoms, etc. You know, where you get a bounce along a support level. But as a whole, we're going to be calling them equal lows, or on your chart, you're going to mark them up as the EL. Okay. Next, we have the stop run. All right. So this is the step 2 of the trading plan. So the rules that we've got in place. So are they equal highs or lows? Then step 2, has there been a run on stops? So when you get the run on stops, you're going to mark that up with SR. Okay, so that is what the abbreviation you're going to be using for your markups. Next, then we've got price rejection. So step 3, you're going to be marking that up with PR. Okay, just to keep it all relevant in the group. And then we've got there's two terminologies you can use, or 2 terms you can use in this next part. Okay, so first of all, you've got break of structure, or BOS. You can use that term, or the next one you've also got is a structure inversion point. Okay, so SIP. Now I prefer the term SIP, or structure inversion point. I think it just suits the analysis better. But if you do want to use a more simple version, you can just put a break of structure. Okay. Next, then we have the load level. Okay, so that is a point where it's a point where price has moved away from quite rapidly with volatility. Okay, I'm going to go through load levels shortly, but load levels, you're going to mark them up with LL. And then next we have the single structure retest. Okay, so I'm going to be going through the SSR soon, but you're going to be using SSR for the single structure retest. Next we have the double structure retest, so similar to the single structure retest, but you're going to be calling it a DSR instead of SSR. Next you have resistance level, so RL, so that is a point where price cannot break through a ceiling, so you're going to have a high point in price and prices bouncing along that level. Okay, so resistance level, we're going to be looking at them levels to potentially get ran before getting a reversal. Next you get support levels. Okay, so that is where you've got a floor on price and where price is bouncing along a floor. Again, we're going to be looking for that to eventually get ran through before reversal, so SL. So you've got RL for resistance level and SL for your support level. And then finally, we've got the stop accumulation zone. Okay, so this is a level where it's either beyond resistance or support. Okay, so when you get a bounce along support, there's going to be stop losses or sell stops accumulating there. Okay, so through breakout traders who are going short or buyers who are looking to put their stop loss underneath there to protect the position. Same again, if you're looking for sellers in the market, they're going to have stop losses above a resistance level. You're also going to have buyers with a buy stop above that level in order to catch a breakout. Right, so they're stop accumulation zones, all right, or SAZ. Okay, that is the terminology complete. So using correct markups then. Now, there's not much in this slide. I just want to talk about the importance of using correct markups, right? So in our group, we're going to be looking to really push our own terminology and our own way of marking up a chart. You don't need indicators. You don't need Fibonacci levels on there. You don't need support and resistance lines. It's very, very basic levels of marking up a chart, okay? And you're going to learn that throughout this series. Now, the reason we want to make sure you use correct markups is because we don't want any confusion in the group, right? It's as simple as that, okay? We don't want traders coming in and you're marking up things like Wyckoff schematics or ICT order blocks or levels of Fibonacci levels, things like that. We want everyone to stick to our trading method. It's very simple, four-step rule set. Okay, we want you guys to stick to that and mark up your chart using that. Okay, so if there's any new members coming in, they're going to know straight away when you put in your charts in the members charting sections of the group, they know exactly what they're looking at and what they're looking for. Okay, so everyone's on the same page. Okay, so moving on to the single structure retest, or the SSR. Now this is going to be going through a short position. Okay, so first of all, you've got your uptrend, all right, and eventually you're going to come to a point where you put your equal highs in, all right? So this can be a triple top, double top, it doesn't matter. It's a ceiling in price where price is failing to break any higher. Okay, now when you get to these levels, you're then going to have sellers in the market with stop losses above. Okay, so step number 1 of the trading plan, are there equal highs or equal lows? Okay, in this case, there will be equal highs. Step 2, then you're looking for a stop run. All right, so this is where they're grabbing the liquidity. Now, you do not look for a setup above equal highs or equal lows. You're not trying to go long chasing price. You're just sitting there waiting and seeing what happens with the market. All right, so shortly after you get the stop run, you're then looking for price rejection. Okay, so these are all ways you're going to be marking up your charts. Right? So equal highs are going to be marked up with EH. you just want to draw a small box over them, or maybe a horizontal line, okay, just to highlight what you're looking at. When you get your stop run, you can mark that with a small box, a circle, whatever you want it at the top, but put SR. And then following that, you got your price rejection point, okay? Now, the price rejection point on a single structure retest typically breaks structure within one move, okay? So you have the stop run, then price rejection, and all in one move you get the break of structure or the structure inversion point, okay? So when you get that break of structure or the SIP, you're going to be marking it with BOS or SIP for the structure inversion point, all right? So that is how I want you guys to mark your chart up if you're looking at a single structure retest, okay? Now, what you're looking for at this point now, you're then looking for a retracement. Now, the retracement is what we call a single structure retest. And the reason for that is, in this market here, there's only one level of structure that's getting retested, right? So I'll go through a double structure retest shortly, but just keep in mind there's no pullback before we break structure. So no little pullback here, what we call a load level, okay? And I'll talk about that in a second, right? But once you get your single structure retest, you're then going to be looking for a position short, in order to get in with that new trend direction. Okay, so that is what the single structure retest looks like, or the SSR for short positions. Now, moving on to the double structure retest, okay, so the DSR in a short position. Now, same as the previous slide, we had our uptrend, and eventually we put in our equal highs, okay? Like I said, it can be triple tops, double tops, doesn't matter, as long as we find our equal highs. You're going to mark them out with EH. Then we're looking for the stop run. Right, and then once you've got the stop run, you're looking for price rejection. Okay, once you get price rejection, you're then looking to see what takes place. So you're not looking for a trade at any point along this level, okay? So what you're looking for is to see what happens. Now, once we get to this point here, you've now got what we call a load level, okay? So this is another another level of structure, okay? This is a double structure retest. Now, when price comes back up, you're then retesting not only this level of structure, but also this level, okay? What we call a load level. All right, so you're looking for a retest of that level. So it's called a double structure retest. Okay, so like the previous slide, it didn't have a pullback before the break of structure. It just went straight through it. Okay, so that's a single structure retest. This is a double structure retest. All right, so make these notes in your notebook. So once you come up for the double structure retest, then you're then looking for a short position at the load level in order to get in with a new direction. Okay, so that is how you want to mark up your charts for the group, right, when you're moving forward in the new group. Okay, next we have the single structure retest, or the SSR for a long position. Okay, so starting off, then we had a downtrend, and eventually we put in our equal lows. Okay, so our double bottom, triple bottom, doesn't matter what it is, it's a bounce along a support level, and there's going to be an accumulation of stops sitting underneath there. Okay, so a stop accumulation zone, and that's what we're looking to get ran. Okay, so once you get these levels, you're always waiting for that to get ran first, and then see how price develops from there. Okay, so first step in our trade plan, have we got equal lows? Yes, we have. Okay, then we're looking at a stop run, so that's your SR. Following the SR, then we're looking for price rejection. Okay, remember this is a single structure retest, or an SSR, and then we're looking for a retest of market structure. So once you get the break, you've got the break of structure, structure inversion point. Whichever you want to call it, it's completely up to you guys. We'll take both them terms in the group, and then you're waiting for a pullback. All right. So when you get the retracement there, you're then looking for a long position in order to get in with a new direction. Okay. So that is the single structure retest for a long position. Now going on to the double structure retest then, or the DSR for a long. You first of all have your downtrend, and then you come up to your down to your level of support, so your equal lows. Again, doesn't matter what it is, a double bottom, triple bottom, or you're just going to label it as equal lows, okay? So as we go through the videos later on in the series, you're going to see that at some points there's 6 or 7 touches in some of the videos, all right? So equal lows, and then we're looking for our stop run. Then we're looking for our price rejection again, and then we're just waiting to see, do we get a break of market structure, okay? So you're just waiting all the time. It's a patience game in here. Okay, then you get a pullback, and eventually you get your break of structure, or your SIP, so structure inversion point. Now, again, in this case here, you had a small pullback here before the break of structure. This is what we call our load level. And then you're going to be looking for the load level to be retested in order to get a position in a new direction. Okay, so once it comes back down here, it retests the load level. So this here is now testing this level of structure as well as this level of structure right here. Okay, so you've got your breaker structure, SIP, and then you've got your load levels. So there's two levels of structure there. That's why we call it a double structure retest. Now this is my preferred setup, the DSR, more than the SSR. Okay, because you can get a tighter stop loss with a better risk to reward. But I'll talk about that shortly. But once you get your retest of the LL or the load level, you're then looking to get a position in the new direction. Okay, so that is the double structure retest, or the DSR for a long. Okay, so we have the single structure retest, or the SSR targets then. Okay, now like I said, my favorite setup is the DSR, and you'll discover why in a moment. But the single structure retest, once you get your equal highs, you're then looking for a run on stops, you're looking for price rejection, then you're looking for your breaker structure. Then you're looking to get an entry on the retest, right? And this is where it's really important to understand where your stop loss location goes. So when you get a retest of structure, you need to be looking, if you're setting limit orders, it has to be on the retest of the broken structure, okay? That's where you're going to be looking to get in. But when you get in on that, you then go put your stop loss above the old high, okay? The most recent high that was formed. So that's going to be your stop loss. And then you're only going to be trying to target a 1 to 3 RR. Okay, so that is what the single structure retest targets are. Okay, so whatever you're risking on top, say it's 10 pips, you're looking for a 30 pip target. If it's 5 pips, you're looking for a 15 pip target. Same with like 20 pip stop, you're looking for a 60 pip target. Okay, so that is your 1 to 3 risk to reward. All right, so that is for a single structure retest. Next, then we have the double structure retest. Okay, so again, you've had your equal highs, you've had your run on stops, you've had your price rejection, you've had your breaker structure, okay, and it did leave a load level here. Okay, so the load level is where you're going to be looking to put your stop loss in this case. Okay, so this is why I like the DSR over the SSR. So once you've had the confirmed breaker structure, you're then waiting for a retracement. Once you get the retracement, you're then looking to get a position on the load level itself. All right, now this is where you can really start to bring your stop loss closer to price, right? Because the load level should hold price away from your stop. Okay, so you're going to be looking to put your stop just above the load level for short positions, and then you're going to be targeting a 5 to 1 or a 1 to 5 risk to reward. Okay, so as you can see, instead of a 3 to 1 or a 1 to 3 on a single structure retest, you get a better risk to reward on a double. Okay, so that's why it's my preferred setup. So that is the double structure retest target for a short. Next, then we've got a single structure retest, SSR for a target long. Again, you've got your double bottom or equal lows. You've had a run on stops, you had a price rejection, okay, but there's no pullback before the breaker structure, so that's what makes this a single structure retest. All right, now when price comes back down, you're looking to, if you're doing limit orders, you're going to be looking to get a limit order set on the broken structure itself. Okay, so that's where you're going to be looking to leave your position. That means then your stop loss has to go below the most recent low, the lowest low. And at this point, then you're only going to be looking to target 1 to 3. Okay, again, so same as the short position, it's just 3 times what you're willing to risk. All right, so if you're risking 1%, you're going to gain 3. Okay, so that is the single structure retest for target long. Then we've got the double structure retest, DSR for a target long again. Again, you've had the equal lows, you've had the stop run, you had price rejection, then you've had a breaker structure, but in this case you've had a load level print before the breaker structure itself. Okay, so you're just looking for a retest of the load level, and when you come back down into that point there, you're then looking to take a position and put your stop below the low here, okay, below the load level. And then you're going to be targeting again a 1 to 5. Okay, so it's just a very simple target system, but you've got to bear in mind whichever setup you're taking, whether it's an SSR or a DSR, your targets are going to be slightly different. Okay, but as you start to progress and get more confident, you're going to develop into finding bigger targets or having ways of trailing your stop loss. Okay, so focus on the setup before target then. So this is just going to be me talking for a moment, but you need to understand this and take some notes, right? Do not try to find a target before you've got a setup, because what you're going to start doing, you're going to be looking for potential, as you develop into your trading understanding and how you can target further targets than what we've just said previously. You're going to be looking for stuff like equal highs or equal lows to be ran, right? But don't start focusing on the targets first, because what you're going to be doing then is you're going to trick your mind into thinking there's a setup coming in price to hit them targets, right? So you're guessing where the market's going. It's really important you don't try and guess where the market's going. So with the whole 4-point system we've got in this trade plan, it's already showing you equal highs or equal lows. It's already showing you it's run the stops. It's showing you that price is rejected. It's also then showing you that the you've had a break of stretcher. Okay, so the market is showing you what it wants to do. All right, so it's really important you don't look for the target before the setup. You always focus on the setup. Once you get the setup, then you're going to look for your targets. Okay, so risk management then. So we always look to risk between 0.5% and 1%. So 0.5 and 1%. So 0.5%, 1%. And there's a reason for risk management. Okay, now if you're one of these people that likes to risk 10, 20 or 30% of your account, you're going to find out now how long it takes you to get back to that point. Okay, so if you lose 1%, you're looking to gain 1% of the new account balance in order to break even on that account. Okay. If you lose 5%, again, you need 5% gain in order to break even. But then as you start to go up, you'll notice that the percentage gain needed to get back to break even on your account, it grows quite dramatically, all right? So at a 10% loss, then you need 11% gain on the new account balance in order to get back to break even. Okay, 20% loss. So if you lose 20% of your account, you now need to make 25% of the current account balance in order to get back to break even. Again, if you lose 30%, you need to get 43% gain to get back to break even. And I'm just going to go through these now. You can look at them as they're coming out. So 40 is 67 gain, 50 is 100%. So 50 at that point, when you lose 50% of your account, you need to then double that account to get back to break even. Okay, so that's why risk management is so important, right? So 60% loss, you need to make 150% gain to get back, and then 70% you need 233% gain to get back to break even, right? So this is why risk management is so important. So if you're one of these people that's trading a very small account, I would personally go back on demo and save your money up until you can afford to get into a funded program. Okay, so like FTMO or 5%ers or someone like that that does prop trading. Okay, at that point, then you can then use correct risk management. And you're not risking high leverage or high risk on your small account during the time where you're trying to build the account itself, right? So get used to the skill set. Save your money up, don't blow the accounts, and then use that savings that you then got to go into a prop company. Okay, and as we always say, use proper risk management. So 0.5%, 1%, 2%. Maximum I would ever go is 2% on the FTMO account that I'm currently on. Okay, so eliminating fear in your trading. So I've said it in a couple of my videos on YouTube, you need to stick to one trading method, right? And when you stick to one trading method, it's going to help you grow and learn to trust that method, right? And once you've got a method that you really like, whether it's ours or not, you can, if you don't really resonate with what we're doing, it's only a 1 month rolling membership. You're free to leave and then go and learn from somebody else if that's really what you really want to do. But you need to make sure you're not system hopping, okay, from one method to another. Because you're never going to really stick to something long enough in order to gain trust in it, right? So once you stick to one trading method, you're eventually going to develop what we call a trading system, okay, or a set of rules, and that's what we've got, our four-step trading process, okay? So have we got equal highs or lows? Have the stops been ran? Have we had price rejection? Has there been a break of structure? Okay, 4 really simple rules to get into the market. Once you've got your trading set of rules, you then got to stick to correct risk management, right? So like I just said on the last slide, if you're risking, high percentages of your account, it's a lot harder to get back to break even, okay? Because you've got to risk even more or make way more percentage gain in order to get back to that level before you continue into profit. Okay, and then you need to know your trading times, all right? This is really important, okay? So don't be trying to trade all day, every day, 5 days a week, 3 market sessions, because you're going to get absolutely exhausted and often get really frustrated in the market. And when you get frustrated, you're going to start taking, silly trades and eventually start over leveraging, over risking, and then if you do take a couple of losses, you get more frustrated and you end up going into revenge mode. Okay, so that's where you start to risk too much, chase trades, and then you begin to blow accounts at that level. Okay, so know your trading times, right? So with me personally, I trade a Tuesday, Wednesday and Thursday, 4 hours in the New York session. That is all I trade. Okay, I'm not interested in Mondays, not interested in Fridays, and I'm not interested in trying to catch the bigger part of the move that takes part in London Open. Okay, so you need to develop a trading time that suits you around your work, around your family life, any hobbies that you've got. You need to make sure you stick to all that and make sure you spend time with family as well. Right? It's really key. Because eventually if you just trading full time, 3 market sessions, not spending time with friends, not spending time with your family, they're not always going to be there forever, are they? Okay, and the market will be, right? So just bear that in mind. Like I said, I trade New York. It's my preferred time. I know a couple of our traders like London session, and there's a couple of traders that like the Asian market as well. So, but they stick to their markets. Okay, so know your trading times. Okay, focus on the process and not the outcome. Again, I've talked about this in some previous videos on YouTube. If you're focusing on money and you're chasing money, like I've said in my other video, money will always run away. Okay, so if you're chasing money, you're not focusing on the process. So you're not focusing on, sticking to your rules, managing your risk, being, patient, making sure you're waiting for that correct setup. That's the process itself, right? And the natural outcome of that process is better trades, and the natural outcome of better trades is more money. Okay, so don't focus on the money, don't chase the market, focus on the process and perfecting, really becoming a master of the actual setup itself and how you understand it. Okay, so focus on the process, not the outcome. Okay, remove all distractions during your trading window. Okay, so if you're trading, in my case, let's say New York session, you need to make sure that your mobile phone's turned off. You haven't got people coming in and out of the house, your mum and dad screaming at you, or your wife or your dog barking. You need to remove yourself from all those distractions during your trading window, okay, so the period which you're taking your setups. Okay, do not trade if you're in a stressful environment. Now, this is something that the mindset coach is going to be really touching on throughout the membership, all right? So if you're part of the membership, you have got access to the mindset coach. He's going to be talking about if you're having an argument with your boyfriend, your girlfriend, your mum, your dad, if you're under pressure with money, you can't pay your bills, you don't want to be trading if you're in that sort of environment, right? Because you're not going to be thinking straight. You're going to be trading more emotionally than if you were trading, in a calm, relaxed manner. Okay, so don't trade if you're in a stressful environment. It's really, really important, that one. If you guys don't listen to that one, you're soon going to find out how it can affect your trading. Okay. If you miss your entry, wait for the next setup. Now, one of my old mentors used to say that trades are like buses. Okay, so if you miss one trade, there's always going to be another one coming. All right, so sometimes you're going to find that the entry doesn't quite get to where we want it to in order to get into the market. If it doesn't, just be happy. Move on. Don't start kicking yourself and trying to look for some sort of entry in that direction, because you might find even later on, if you start chasing price, it might eventually come back to that entry point that you were looking at, right? So if you miss your entry, wait for the next setup. Just step aside. If you need to, just turn the charts off. And over time, you will learn to trust the system, right? So this is, a sort of overview of everything I've talked about in this presentation, right? But the more you start to trust the system, you want to do loads of back testing, you want to do loads of forward testing. There's a really good replay feature on tradingview.com. You can get a free account there. You can use the replay feature there where you can delete part of price and then play it again, and you can sort of, test your trading system that you're looking to develop, right? So, do a lot of back testing, do a lot of forward testing, do a lot of demo. If you can't 10x your demo account, you're not ready to move into live accounts, and you're definitely not ready to move into a funded prop company account either. Okay, so you've got to learn to trust the system, and over time you'll be really relaxed, really calm. You'll know what the long term success rate of that system is. Okay, so it's really important you do that. Stick to one system, and over time you're going to learn to trust it. All right. And that is it for this presentation. Okay, so if you want any more information or you want to follow us on our social media, go to www.decisionofpower.com. I will see you in the next video.